my fear with Bitcoin and some of these cryptos, right? Like, you just don't know. Like, what I do know is real is the blockchain itself. That technology is real. Like how you can validate transactions, like that's not going anywhere. But like, we don't actually know who created these things, right? We don't know. Like, and my fear is like, it might not be today, it might not be tomorrow, but something's going to be said. And my fear is that might just shift the whole price, just like what happened with NVIDIA. And I don't think something is a 20% shift in Bitcoin. I think it could be find out so-and-so made it and there's a back door into it or what. Like, that's my fear with it.
There can never be more. And I'm more comfortable with NVIDIA going wherever it goes, because at least you can analyze and say, we think the earnings will be X, Y, Z. And at that, a year out, and it's 35 times earnings, which is not cheap, but it's not super expensive.
So today on the New How podcast, we have Rich Sichel, Executive Vice President, Senior Investment Strategist, and has been with the Philadelphia Trust Company since 1999. And he's responsible for the firm's investment policy and strategy. He manages equity and fixed income portfolios for individuals, foundations, and endowments, Taft-Hartley plans, and public and corporate pension plans. Prior to joining the firm, it says Mr. Sichel. I won't say Rich because I know you as Rich.
Please do.
Was employed as Chief Investment Officer and Investment Counselors of Bryn Mawr, which is a department of Bryn Mawr Trust Company. During his career, he's been an investment officer and director of investment research with several Princeton and Philadelphia institutions. Rich is also a member of the CFA Society of Philadelphia and several estate planning councils. He's a board member of several nonprofit institutions. He is frequently interviewed on the radio, television, and print media. Rich, thank you for being on the show today.
Sure, my pleasure.
I'm glad we have you on the show because, the world, we just had an election we went through, the world, everyone's looking at the market. Oh my God, I got the guy here that manages, and I noted, over $2 billion in assets for people. That's $2 billion with a B.
Yes. It's a great responsibility, and I love that responsibility.
Yep. And I also had to, every time I have somebody on, I always think back to like how I met you. And I met you at this point over 18 years ago, and I've been working with you ever since at PTC. And you've done great for me. You've done great for people I know around me. And it's just, you always send me an email, and it's always something related to what's happening in the world. And I think today, you being on the show, telling people from your perspective, you've been in the industry now, how long?
A lot of years.
More than I've known you, right? So,
right.
I think you bring in some experience and knowledge, and I'm going to grill you today in a good way, because I want you to talk a little bit about the market and what you're seeing. But before we get into that fun stuff, I want to hear from you. And I ask everyone why, and I guess in your case, money and investments. What led you to the path of getting into helping other people grow wealth?
Well, interesting. The thing that got me into math was baseball card. I was this little nerdy kid walking around reading the back of baseball cards and doing the division and all that. How many
of all the stats on the back?
Yeah, and I would figure, okay, hey, this guy's 150 for 480 at bats. That's about 300 and whatever. And so that's where I learned my math. Also in school,
you weren't sports gambling back then, right?
I would have, but it wasn't around.
Yeah.
And then, my dad worked in New York. He would bring home the Wall Street Journal, and I would look at the Wall Street Journal, especially at the automobile sales for some reason, okay? Because I was into that as I got into cars, and to see how, back in those days, how Chrysler was doing versus GM versus Ford and all that. And it's got more interested in numbers and the market and good old capitalism. And so I went to college and, finance major, and went to work for a bank and trust company right away. Started out as a trader, did some trades. I remember my first trade I did, it was a long time ago. It was a $6 million trade, and which is still a fair amount of money.
What year was that?
And so that was back.
It was back, yeah.
Yeah. And as somebody said, once you press that button, or once you say, okay, it's done.
It's gone.
Don't say, oh, I meant to. Yeah, too late. So that got me going. I wanted to be a money manager. And
like managing other people's money,
right,
not just
right.
So starting with individuals,
trading, right. So I enjoyed being in the investment part of it, but wanted to be a portfolio manager. So I was able to start doing that.
Yep.
And now learning on smaller accounts, which isn't quite right, but that's what you do.
Yep, that's how you started.
Right, and you go from there, and several changes of jobs over the years in Princeton area, Philly area. Yep. And well, I live in Bucks County. I'm from New York originally, but jobs have been down here.
Yep.
And I've been with this firm now, Philadelphia Trust Company, from when it was started in 1999.
And talk about Philadelphia Trust, because he gets the name like, oh, trust, like they're managing trust for people. Like that's not the case at all. Talk a little bit about like what the company does over at PTC, and you work for institutions, you're working for individuals. Like talk a little bit about what you do down on Market Street.
Right. Yeah. And we call it wealth management. It's changed over the years, portfolio management, wealth management. But basically what you're doing is taking care of people's money, investing in stocks, bonds. You can be more esoteric than that too. We tend to stay, pretty much in what we think are the best stocks in the world, and high quality bonds.
Let's throw in a disclaimer: none of this is meant to be taken as investment advice from here on out. Right? We're gonna throw that in.
We'll go with that. and working with institutions, which can be pension plans, endowments, foundations, et cetera, and individuals. Everybody wants to do well. And a lot of it is also the personal touch, more with the individuals, with the institutions. I mean, they want to know you and trust you.
Yep.
And but everybody wants to get through the tough years.
I think of that scene in The Dark Knight Batman where he's like, run the numbers again. We don't want the trust to run out, right? Like, so those big institutions are looking at you and and you're advising them to how they keep their operations running for another 100 years, right? And that's...
Yeah, again, was individuals or institutions, they want their money preserved, and they also want it to grow, which might sound like, how do you do both? And that's that's
the
not
magic.
It's not easy, but that's what we do.
Yep.
And the way to preserve that is, in the down years, and there are some big down years in the market. Most years the market is up, but when it's a down year and it's down a fair amount, like in '08 and a couple other times back in the .com time when they all disintegrated, basically in 2001 and '02. If you can preserve your clients' assets, and if it's down a lot and you're down, that's okay, but you're down not as much.
You want to be down less than everyone else is down, right? Like that's
because you're really, fighting back. So, if you're down 25%, you need to be up 50% to get back where you were. But if you were down 14% instead, okay, you're going to be your money back much quicker and grow from there.
Yep.
So, in up markets, you want to perform well, obviously, and with the averages. If you can do better than the averages, that's fine.
Yep.
But again, you put the two together, if you did preserve in the really tough years, and then grow somewhere in the range of where the market is or better, you grow assets dramatically.
Long term. Yeah. So as like investment strategist, right, you're constantly looking, you're, I guess, overseeing what trends are happening. Where like, talk a little bit about like what you do, like what habits do you do every day that helps you look at the world the way you do? Like, does it start with like picking up the Wall Street Journal, on the toilet in the morning? Like, what is that?
It used to. It starts with reaching over for the phone.
Oh, yep.
And the first thing I look at is what are the futures doing?
Okay.
Because that can tell you that, the futures are down.
I never look at a future. So like that.
Yeah. And I don't recommend looking at the individual stock futures because it could take a few hundred shares to move the stock.
Like what's happening on the other side of the world ahead of us. Futures?
The futures are telling me what happened for those few hours I was sleeping. And and I always feel good. Oh, it's up a little, it's down a little. That's fine. If you see, it's down a lot, what happened? Then I start digging. Or it's up a lot, what happened? It's a happier dig that I'm doing.
Let's scenario. Market futures are down for the morning. I got to start digging. What are you digging into? What websites are you going to? Are you on marketwatch.com, Yahoo Finance? Like, where are you at?
Yeah.
Where's a guy who's managing $2 billion in assets looking to see how the 9 o'clock day is going to start?
Yeah, and it's somewhat predictable. You know, CNBC's app is good, Bloomberg, Fox Business, and just to see there will be similarities in cases.
Yep.
But a different take on
So you're
things.
looking like for common trends, like, China's invading Taiwan this morning, and everything tanked over there because all the rare minerals.
Geopolitical event. Then I jump out of bed right away. But I have
Skip breakfast that morning.
I have to get to the office and eat in about 10 seconds instead of 20 seconds, as I normally do. And somehow I think if I'm in the office, then everything can be okay. While I'm in the car driving, I'm listening to the 3 stations, to the 3 that I just mentioned. And it's a long ride, or a slow ride, let's say. And one day the satellite went off, and I'm driving and thinking, this drive is horrible. I didn't realize how bad it is. And I don't even know what's on FM anymore. And I didn't know what was happening with the market. So, getting to work is good. We have a great team. We have 20 plus people, and we'll talk about how the market's down. The futures are down, and again, with the Dow, hundreds of points is a small move these days. So the typical day, the futures are not up or down very much. And as I said too, nobody should really be concerned or say, hey, XYZ stock is down 5%. It might have been 200 shares that did it. So the futures are misleading to some extent.
While we're on futures, I knew you were coming on. I had this question I was going to ask you, and I briefed you on it. There's a scene in the show Billions where they're like looking at the futures of how companies are going to do, and they're looking at satellite imagery of like some company. Like, is that stuff? Is that real? Like, when you're predicting how companies are doing, like, are you using things like satellite imagery to predict how companies could be doing?
Well, that sounds exciting, but we don't.
Like, it makes sense in the movies, but it's like,
Yeah, I mean, they're monitoring, who's driving into where and who might be buying a company. And if they're shorting stocks, which is risky but also rewarding, there's much immediacy to that.
And I'm assuming you play on shorting and investing in stocks long term.
So we're long term. Long investors. We don't short, and typically buy U.S. based companies. And for good reasons, we think, based upon that we understand the accounting, we trust it, we trust what they're saying.
We trust that it's real, right?
That it's real, and so we might miss out on a company in China that's doing great or someplace else, but we also don't totally believe maybe what they're saying. So we don't want to put our clients' money into something like that. And with the multinational companies that we use, you're invested in all the countries in the world, so it's okay with less risk.
Can you talk a little bit about just the cycles of the market? Because like a lot of people that might listen to the show are in the real estate industry, and they know there's cycles that happen in the real estate industry, right? Sometimes it's a great seller's market, sometimes it's a great buyer's market, and obviously the macroeconomics play effect. Like when the market's down, typically stocks are down, right? Can you just talk about from your perspective in the finance stock bond world, like talk about how often cycles happen. Maybe we'll get into like what cycle are we in now? Where in that mark are we?
Yeah, and I could go back to the .com for a minute. I mean, that was the late 90s, and the market was up 20% plus from 95 to 99, which is unprecedented to be up that much 5 years in a row. A lot of it, the last year of that was based on something called pets.com or anything else.com. So the internet was just getting going. And there were real companies like Microsoft, but there were also companies that went from $100 a share to nothing. So, and we stayed away from the ones we never heard of and stayed with the good ones. So that was a cycle where the market then went down 3 years in a row, 2001 and 02. And the NASDAQ, which used to be called the over-the-counter, but basically the tech was down something like 85%. The Dow and the S&P were down 30, 40, 50%, which is dramatic. And then '08, and I've seen a lot of cycles, including in the '70s when the market really went nowhere for years. That was a tough time, where basically it was a financial crisis, and it was a major financial crisis. Because typically I'll hear there's always rumors, there's always somebody saying, "Oh, the sky is falling.
Yep.
Get out of stocks, buy gold, hide money under your bed," and I'll get calls like that sometimes. I say, "Take a deep breath.
Yep.
Things will be fine." In '08, it was a very real crisis. The Fed and everybody really stepped in to do what they needed to do, but stocks really got hit. So that was a very tough year.
Yep.
We were able to do a good bit better that year. Since then, there have been ups and downs along the way. And the past 2 years, 23 and 24, the S&P, the basic mark, is up 23, 20, 25%, which is excellent. This year, we're break even a little bit.
I think I saw it was like 1.5% year to date. So okay, you can't. Again, I'm almost glad it's at 1.5% year to date, and not another on track for 20%, because that would scare the hell out of me. I think it's the 70s again, or the 90s again, right? Like we might have an 80% return.
Yeah, because somebody was asking somebody today, "Oh, do you think the market could go down 10%?" Well, the market could go down 10% based on a lot of factors, and it wouldn't be the end of the world. And in some ways, that's a good thing. You sort of squeeze out some of the speculation. Some of the people who really are not investors are just in there short term and just sort of seat of the pants investing, which is not the way to do it.
Let's talk about something that just happened recently in the news. I don't want to belabor it too much, but the NVIDIA stock, right? You saw NVIDIA stock had a great split, went 1,000 a share, split down, 100. It's about 135 a share. Then all of a sudden, some announcement gets made by some company no one's ever heard of, and the stock dips 20, 30%.
20, 25%.
On a snap of a finger.
And the market tanked also.
Because NVIDIA has such a massive pull, right? They're like one of the biggest companies right now in the world, right? Do you my fear would just something like that, how does the news just get out? It seemed to me like no one did any digging. No one really understood. Because in my head, I looked at it and I was just like, this is BS. There's no way. Something is aloof here. But I also think someone made a lot of money that day because they knew this was coming, right? Talk about how does that stuff like that happen? How does something dip 20% because of an announcement?
Yeah, the market tends to be either too happy or too unhappy. That's basically what it is. It's usually nothing in the middle ground, and either one is not the best. Too happy means things are probably overvalued. Maybe you should take some gains out of the stock. The other side of it is everybody hates everything, and here's Microsoft or TJX, which is TJ Maxx, which is the only retailer we would buy, and
it's where everyone's shopping, right?
And it does well. Everybody goes there of every type of income, right? So it's a great retailer. Most retailers they have their day, and then the world passes.
I did just buy a couch from Macy's though, so you might want to get some Macy's stock.
I could do a half hour on some of the retail things we've seen over the years where it became disasters. But I guess what you'd say is that people think everything's going one way. Try to think the other way. Keep your head, keep your cool, and that's one of the things that we're paid to do, is to keep our cool and do the research, do the analysis, talk about it, not say, hey, the stock just went from 60 to 50 and somebody said everything is terrible, let's get out. We want to look at that. Maybe we want to buy more of it at that point. And again, on the other side, everybody loves something, and it's a pretty big part of your portfolio now. We might want to start paring back, take some gains,
put it elsewhere and things like that.
And there are people over the years who have spited themselves with I don't want to pay capital gains. And if you're going to pay tax, it's the best tax.
I would rather pay the capital gains than not pay the capital gains.
Yeah,
because it's not there.
Case in point, it was 1999. I had a client come in at all GE, General Electric, greatest company in the world then. Welch he was the smartest guy in the world. Stock was 65. And they had been making some healthcare acquisitions, things like that. And we didn't like what they were doing. So I said, we should start to move out on strength. And yes, there will be some capital gains to pay, but capital gains means it's not your paycheck where, hey, there's nothing left for going to work, but it's a case of, and you get a lower tax rate too, but a case of being smart, lucky, and making money. That stock ended up going to $4 a share from 65 to 4.
That's great.
In 08, from 99 to 08.
Wow.
So, and we were out of it years before that.
I'm assuming that person's probably still a client or close to it.
Thanked me later.
Yeah.
Later than that first day.
Yeah, that's great. No, that's amazing. Talk a little bit about, your outlook right now. I want to get into the current state of affairs. And just for everyone, so we're literally in 45 minutes before NVIDIA's earnings calls for the quarter. I just want to put it in timestamp for everyone when this call is happening. But I want you to talk a little bit. Let's not get into who we voted for or whatever. I want to more get into, there's a lot of stuff shaking up, just people in general, where they're worried about. There's tariffs. There's a lot of battling going on geopolitically. I want to know from your standpoint, how do you think things are happening, right? We're also seeing this, this DOGE, DOGE, Department of Government Efficiency coming in and cutting, fraud, they're claiming fraud, waste, whatever across the government.
Right.
Is any of this going to affect the markets? Are we seeing any effect of it currently? What's your outlook as chief strategist? How are you navigating these waters at the moment?
Well, I think, the market reacted to the election the next day, went straight up for a while.
Yeah.
Pro-business, less regulation, sounds good. But then reality sets in, and it has more recently of, now how are you going to do all these things? So that's where we are now. So the market's given something back. So you went from euphoria to, oh, nothing's working. Somewhere in between there makes a lot of sense. And again, if you're investing, if your horizon's 3 days, well, I don't want to talk to you, but if your horizon is 2 years or 10 years or 30 years, yes, there's always opportunities, and there's a little more volatility now. And even just when you hear the word tariff, some people are selling the stocks because somebody said tariff, and that tariff might go away 5 minutes later sometimes. So why did you sell that stock? So again, you need to know the companies. And if you are that nervous, you either shouldn't be in stocks, or what is called asset allocation. Your allocation should be maybe half stock, half bond, something like that. And we spend a lot of time on that. And we could talk more about it if you like.
Yeah, talk a little bit about, so in today's market, someone that might be a little freaking out on tariffs, or I'm unsure what's going to happen. What are you advising them? Like, is it, talk about the bonds, like are the bonds being affected, or the rate of return on those because of what's happening? Are you seeing an uptick in 10, 20-year notes different than you were previously?
Yeah, well, bonds, we say, are boring, but nowadays they do give you good income. We did have bonds at 1% a few years ago, but there was no inflation then. But nowadays you can get 4.5%, 5% in AAA quality bonds, which again, when the stock market's going straight up, those bonds are boring. When the stocks get hit, those boring bonds look very good.
Fantastic. NVIDIA.
Yeah, they can move. They move a little bit in price. But they're there for a purpose, to provide income and provide stability. And risk basically means the amount of volatility that you have in your portfolio, and how much volatility can you take. And the thing that I see in this, and I don't agree with it, is that there are advisors who will say, well, you subtract your age from 100 and you come up with that number, and that's the percentage you should have in stocks. Everybody at that age is different. I could have 10 people, everyone's different at any age, as far as lifestyle, income needs, et cetera. And also the very important thing, how do you sleep at night when everybody's saying, oh, gee, the market was down 800 points. Does that bother you? Nobody's happy when that happens, but does that keep you up? Or do you think, hey, I'm a long-term investor, that's okay? So you can have your stock and bond ratio to suit you. And again, there's nothing better, and I believe even better, I think even better than real estate, is high quality stocks over the long term. They'll go up, they'll go down, but they'll go up over the years. And so you'll have that volatility, and then you can have the bonds sort of tempering that.
Yeah. Let's get into, I want to hear good and bad war stories. I want to hear a time where like you messed up. It's okay. And then I want to hear a time where you like smacked it out in the park with 3 on.
Let's see.
Either one first is fine. Yeah. Just something that comes back in all the years. You'd be like, what's something you're like really proud of? And then something like, wow, I wish I, didn't buy, horses before GE put out the car, right? Or GM put out the car, right? Like what is,
Well, I'm happy about that GE story and others that I've done over the years. So in that way, that's a defensive kind of thing, but where you save somebody a lot of money. Because I had a client who came in, he gave half his money to us to manage, and we made a diversified portfolio. But he had been, I guess I won't name the bank, but local Philadelphia bank, that merged about 10 times.
Yep.
And he worked for some of them, and he had about 2/3 of his money in that one stock. And he said, well, he would keep an eye on it. And I said, it might sound self-serving, but you need diversification. You're all in this one company. And that one company, that was about 5 years later, 2008 came along, and that stock went to about $3 or $4
became
a share.
A penny stock afterwards?
Close to it. So he lost about 95% of his capital on that. Jesus. And the other thing that he lost was the dividend. He was getting dividends of something like $150,000, $180,000 a year.
That's crazy.
And that dividend went to zero. And he was living off that. So that's an extreme. But
that's big
those
money
things
back
can
in
happen.
08. That's big money in 08.
Yeah.
You're making $108,000 just on a dividend. You're
right.
upper middle class at that time.
Yeah, bring that number forward. That's more like $500,000. So that's really what I think. We're hired to do, to obviously help find the good ones and don't stay in love with them, but also guiding clients through all kinds of situations.
Absolutely. So the bad one is you wish you were able to convince him to kind of diversify more than he had.
Yeah. And we don't have Tesla, so
don't have to, yeah. Well,
we've missed all kinds of things.
Yeah, of course. You might get it back. You never know. You never know. Could code the loop again, right? Buy it when it's low, sell when it's high. So like in today's world, right? Like, what type of technology are you using to like look at everything? Like, a thing like me, like, is it like I log into Charles Schwab and I see my stocks? Or like, talk a little bit about like, everyone sees like the NASDAQ, like down on Wall Street, right? Like all like, do you have that type of stuff in your office, or is it more like talk about what the tech is that allows you to manage all these assets for people?
Yeah. Well, our traders and such have several Bloombergs. That's what the machine is called. We used to call them quote machines, and you could get quotes. Well, over the years, that's Mr. Bloomberg, who was mayor of New York. They're expensive. They provide more information than anything in the world, and everybody has them and has to have them. Now you can say, well, everybody has that. What do you do? It depends on what you do with the information.
Gotcha.
There's so much information out there. And, more than a few years ago when I started in the business, we would get into the office and we would sit down and we would read the Wall Street Journal, which would now be, okay, I'm sitting here reading yesterday's news. Why? And clients would call during the day and say, what's the market doing? So things have changed a bit, and the 24/7 cycle, and in some ways there's too much being thrown at people, and they're saying, okay, somebody said the market's going to go down 1,000, but you told me it's going up. So you get more of that now. Everybody's informed, but you sort of have to watch, who you're listening to.
And you have to be on 24/7 today versus where traditionally might not have been that.
Because people say, "Oh, it's the summertime, it's the slow time." I said, "No." They say it's almost Christmas. Slow? No. There's a market open somewhere. The world is open,
Yep.
and our stocks will move. Well, the main thing that moves stocks are corporate earnings.
Yep.
But also there's just 1,000 other things that move the market. So it's never a dull moment, and that's one of the things I love about the business.
One of the things like I think of, right? Like, and again, I have you to help me with some of my stock stuff, right? So, but like I start thinking like, all right, like Valentine's Day, right? Like I got to think those chocolate companies are going to do great for that month, and then their next quarter is going to be great. Like obviously there's cycles long term, but like there's got to be yearly cycles with these companies that you're monitoring and looking at on a consistent basis.
Yeah, and anything that's sort of predictable like that is already in the stock most likely.
Yeah.
And when we're looking at bigger cycles, we don't want to just say that, a certain company had a good 2 weeks.
Yeah.
Now, if they had 2 weeks where they did double what anybody thought they would do, we want to look at that and think about it and talk about it. Mm-hmm. And that gets back to, what I was saying, that, everybody has a lot of information. Mm-hmm. And it's basically, just really knowing, let's say, making decisions, getting together. We have our policy meetings and they're all documented and that's all nice. Mm-hmm. But we meet about 25 times a day as we walk down the hall and talk to each other. And I'll see a stock that's up. I'll look and say, hey, Broadcom's up 8%. Check whether I might know why it is, or I'll check with one of the other people. And I'll say, oh, well, management just said this and that, and that's why it's up. Okay, do we want to do anything with that? Maybe, maybe not. Maybe we want to sell some. Maybe we want to do something. Mm-hmm. But again, so it's not, well, we'll discuss it at next week's meeting at 3 p.m., or on a Zoom, because, we're all in the office all the time and constantly talking about the market. Mm-hmm. And we can be move very quickly. And years ago, brokerage commissions were very high, extremely high. And they used to talk about churning, and brokers would churn, basically telling people to buy or sell stocks because there was a lot of money to be made to them. But let's say it was in the early 1970s when they took away the fixed rates, and it became competitive. Mm-hmm. And it became so competitive that, and we're not a broker deal, and we don't want to be. We just want to manage people's money, for a fee, and we don't, take a penny of anything else. And the commission we're paying now is something like a penny a share when we make the trade. Yep. So if your trade is $20,500, with the commission, it might be $20,505.
Correct.
And that's part of the cost basis.
Yep.
So things have dramatically changed in that regard. Mm-hmm. And the other thing used to be, too, that it would take 5 days for any trade to settle. So it'd be a full week. If you bought something, it really wouldn't show in the account for 5 days, or 5 days later, if you sold, you would get your money 5 days later. Mm-hmm. Where now it's 1 day. And maybe down the road it'll be 10 minutes, but 1 day is pretty quick. And so many things have gotten better and quicker. Mm-hmm. As I said, everything about that isn't always positive. Mm-hmm. When it's, somebody said something, or somebody those are the things that can get in the way.
Yep. Let's dive into something you haven't seen long term in the market. I want to get your opinion on it, because I think people will trust, to understand what you say about it and the weight your opinion. But I just want to understand your take on cryptocurrency, because that is new, right? This is this term, right? These virtual coins and things. And you have the Bitcoin, Ethereums of the world. Like, I'm sure you have clients ask you about it. I'm sure you have your own opinions about it. Where is your thoughts at? Like, I have a gentleman in my Vistage group that he's literally investing his cash from his company and buying some of these cryptocurrencies and holding them on balance sheets. What are you seeing in those 2 billion assets you oversee? Or do you have clients that have the stuff? Do you have, what are you doing in that regards? And how do you approach when someone like myself goes, Rich, I love stocks, but put me in some Bitcoin.
Yeah, and we can do it. And I'm not an expert on it, and I haven't found, I don't know too many people who are. There's a lot of strong opinions. And people who got in early have made a lot of money. As we speak, it was down about, went from 108,000 to about 88,000.
That's part of the cycle.
In the past couple of weeks. And the cycles
right?
Are all over the place.
We'll say that, right?
So is it a buy now? Yeah, I'd feel much more comfortable talking about Microsoft or TJX as I would it be a buy at a certain point? But if somebody wants to participate, we don't want to close our eyes to it.
Correct.
So we can do it by way of an ETF.
Yep.
So we can exchange traded.
My fear, and here is you're talking to someone that doesn't. I own no Bitcoin, right? My fear is exactly kind of what happened with the whole NVIDIA situation we just saw, where an announcement's made, and all of a sudden a stock tanks 25%, and we don't even know if that it could be fake news, could be whatever.
Yeah.
My fear with Bitcoin and some of these cryptos, right? Like, you just don't know. Like, what I do know is real is the blockchain itself. That technology is real. Like how you can validate transactions, like that's not going anywhere. But like, we don't actually know who created these things, right? We don't know. Like, and my fear is like, it might not be today, it might not be tomorrow, but something's going to be said, and my fear is that might just shift the whole price, just like what happened with NVIDIA. And I don't think something is a 20% shift in Bitcoin. I think it could be find out so-and-so made it and there's a back door into it or what. Like, that's my fear with it.
There can never be more. And I'm more comfortable with NVIDIA going wherever it goes, because at least you can analyze it and say, we think the earnings will be X, Y, Z. And at that, a year out, and it's 35 times earnings, which is not cheap, but it's not super expensive. And back in the 60s into the 70s, there were these nifty 50 stocks like Kodak and all these companies that don't exist anymore. They were trading at 100 times earnings. So that's excessive. I'm not saying NVIDIA is cheap here, but at least you can analyze the company and say, here's what they have. Everybody wants it. Yes, everybody else is trying to do what they do too, with very deep pockets. But Bitcoin is much tougher to analyze, let's say. But it continues to typically, it sells off and then goes up.
To go up. Yeah, and again, I just think it's like a limited resource, right? It's like they're not making any more of it. So yeah, obviously the price is going to be higher, but like, what are we actually buying?
Yeah,
and that's where I've been just a little hesitant on.
And nobody's buying it to use it as a currency. And I guess anybody who did.
I have a buddy, literally, I have a buddy, I'm not going to name names. He's got one Bitcoin. And I'm like, dude, you going to sell it? No, I'm never selling it. I'm like, well, are you going to leverage it? He's like, no, I'm not going to leverage it. I'm like, why do you have it? Like, at least with like a stock portfolio or a real estate asset or something, like if it's worth $1 million and I only owe $100,000 on it, I can leverage some of that delta in between and use it to grow wealth. Like, you might have you got 1, 2, 4 Bitcoin, you got $300,000, but what's it good to you if you can't do anything with it and you're afraid to trade it because you're worried. And that's why I think the price is where it's at, because no one's moving it. No one's keeping it. The people that are getting rid of it are the guys, the brothers that can't sell it quick enough that bought it, got in at pennies. And of course they're trying to sell it and move it and get out of it, right? And diversify investments. But like, I have a real, that's not just, I have multiple people around me that they have that exact same scenario where it's like, I'm not selling it. I'm not doing it. Things going to $1 million. And then what are you going to do when it's at $1 million? When it's at $1 million, it's like
it became a bit of a religion, and
that's my fear with it. There's nothing, you can't do anything with it. But the technology behind it all, the blockchain technology, now that's something, and that's all another conversation. That's not so wealth management, but that's where I believe that's going to exist and not go anywhere. And I do think there's some, not trading Bitcoin and these crypto technologies, but I think the movement of capital and money, I think blockchain is going to change how that happens, but I don't think it's buy Bitcoin, that's where it's safe. I think it's going to be that technology is going to change.
I don't say it's, the whole thing, or people say, the whole thing makes no sense.
Yeah.
the concept of it makes a lot of sense.
Much like where they used to put the paper in to go down to the floor, right? Sell the stock. Now you're clicking a button and you're
put it in a tube. Have a kind of,
yeah, I think the technology changed. I think if I want to sell a stock or do this, and there's how that happens and where the money's moving, I think that technology could continue to evolve. But I don't think the future is like buy Bitcoin, hold it. That's what everything's going to be done in is Bitcoin by any means.
If somebody wants, to have a small percentage of it,
yeah,
that's fine.
Okay,
we'll take care of that.
Yep. What if I want to do what you do someday, and I'm somebody that's in college or exploring or getting into what I'm trying to do, and I'm passionate about money and finance. Like, what advice would you give them as like a route to start with? And I know, it could be different today, but I know, you mentioned where you started, you got into a banking company. Like, what does that look like today if you were to talk to like a group of high school students?
Yeah. I mean, if they're going to college and they want to do finance, business, whatever you want to call it, it makes you very marketable for various types of jobs. And if you want to get into the money management, the Wall Street thing, yeah, the first job is the toughest one. See if you can get some internships, something like that, to build a resume, and then just get your foot in the door. And once you do, you're going to learn a lot. I mean, I've seen a firm like ours. We have a couple of really young guys, and they're doing 2 or 3, 4 different things in a day. And learning while they do it, working closely with some of us.
Yep.
And we are a team. And whether you stay someplace for your whole career, that doesn't happen much these days. But that is how you get to learn. Obviously, you learn in school, and then you get to the real world, and you will get an opportunity to learn. If it's a big company, they'll have some kind of training program where you'll learn a lot of things. Very much programmed, or a smaller company like ours where
you're in the fire.
In each day you're not quite sure, and you're going to be doing some training. You're going to be doing this, some of that, and learning. And again, I just think it's a great business. I love it. It's never boring for a second.
Never dull.
And I should say, and you are helping people, because some say, oh, you're helping rich people get richer. And you're also helping people who aren't rich to go in the right, to get rich.
I forgot to ask you when you brought this up earlier, you said you get up in the morning, first thing you're doing is checking the futures, looking at it. When do you stop looking at it? Like 4 o'clock comes, the bell rings. Like, are you continuing past 4? How much past 4 are you continuing to look at the market?
Yeah. Well, on my drive home,
you're listening again.
I try to listen to music.
Yeah.
So but I'll start out listening to the business, and okay, it's a rap. Okay, all right, let me listen to some music now. So, yeah, it's always on your mind, but to me, it's in a good way. You're challenged every day with the world, with the market, with clients, with everything.
I mean, I can see it in you, how you talk about it. Like, it's definitely your passion for what you do every day. It keeps you going. Like, it's not a job for you. It's fun for you. It's exciting. You're making an impact for people around you.
Every day isn't fun. I'll have to say that.
No, it can't be, right? You wake up and all of a sudden the market's down.
I love it, and it drives me, and I feel great about what we do, how we do it. And I mentioned too, it's not just individuals or institutions. There's churches, foundations, all kinds of. You're helping them to hold on to their funds, to grow the funds, so they can do more. So you are doing good, as they say, and also it's just something new every 5 minutes, and you have to love to make decisions.
Before we wrap up here, I have 2 questions. My first question is a fun one. This is the Rich Sichel prediction for the market this year. We're sitting, S&P's up 1.5%. Where are we at by the end of 2025? In your prediction, again, this is not to be taken as investment advice, but I want to know from your point of view, you've seen enough. Where do you think we land? And again, I don't know, you don't have a crystal ball. Where are you predicting we land this year?
I'm looking for it. I don't see it, but I could see 10% of the market, which would be good. the average over various periods, you can pick a period and it'll be different. Some periods it could be 12 or 14, but stocks will go up 8 or 10%
3 months have
a
been
year.
slow, but you see maybe by Q3, 4 things start to slide a little more.
We don't need the Fed to lower rates right now, and that's fine. But
I feel like people are squeezed just the right amount right now.
Yeah.
Eggs are at the price where like I'm about to just eat my fist.
We need to help clients make money so they can afford eggs.
Yeah.
But I could see a good year. The last 2 years, mid-20s, which is tremendous. And I think 10% would be
10%
tremendous.
would be a great year.
Yeah, and again, corporate earnings are what drive the market.
Nvidia's come. We got to get out of here because Nvidia's about to announce in 9 minutes. We'll figure that out.
And I do think that we're going the right way as far as hopefully lower taxes, less regulation, and U.S. companies are great.
My last question for you, I usually ask everyone, what would you tell your 22-year-old self if you could go back and just give a little advice that would get you a little bit further ahead than where you are today? A little quicker.
Start out with more confidence.
Start out with more confidence. All right.
Tons of confidence.
You want to make sure you're confident going into what you're doing. I could see that.
Yeah.
Any last parting words for the audience that they need to know? And I'm going to let you smash this like Kramer, like the show. You're going to just smash this like stocks are going down.
Just as far as, wealth management, stay cool. Don't say this guy said this one said that, this one said that. You know what your risk levels are, where you're comfortable, and you can sort of really create or have the one that's right for you with the right amount of stocks and bonds as far as the volatility, the risk, and you can still make money even when you have bonds and stocks together. I mean, there are clients who can have all stocks. That's fine too, or all bonds, and we do that. Yep. But just know where your comfort level is.
Know where your comfort level is. I appreciate that. Well, Rich, thank you so much for being on the show today. Appreciate all the nuggets of information from NVIDIA to how to get into the market to chat on crypto. We touched just about everything we could in 45 minutes here.
And baseball cards.
And baseball cards, yeah. Gambling before FanDuel was out. Right. You should have invented FanDuel is what we got at this. So.
Yeah, good idea.
Cool. So thanks again, Rich. Excited to see what you do and what PTC continues to do for their clients.
Good. Thanks, Brian.
Yep.